Welcome to 7 Investing Now, a show that teaches you how to take a long-term view on investing by better understanding what's happening in the market now.
Good afternoon, 7 investors, and welcome to the Wednesday edition of 7 Investing Now. My name, of course, is Daniel Brooks Kline. I'm the host of the program, and as you can see, I'm being joined today by Maxx Chatsko. Max, how are things in, oh God, what's the nickname for Pittsburgh? I don't know. You're not the city of brotherly love. That's Philadelphia. What is Pittsburgh's nickname?
Yeah, you always confuse us with that. You always talk about our cheesesteaks. That's also Philadelphia. We're the Steel City, Dan. The Steel City.
The Steel City. So that is, of course, due to your proud history of steel manufacturing. But that is not what we're going to talk about today. We are going to talk about the real impact of, and I'm putting inflation in quotes because I'm going to push back and argue that, and the Fed agrees with me, by the way, that what we're calling inflation isn't really inflation. It's not like I called up the Fed and they said, hey, we agree with you, Dan. There's just a quote from a CNBC article that backs this up. But let's talk about the consumer price index. Not the sexiest thing, but the CPI rose by 5.4% in July. That sounds like a huge number, but that's a year-over-year number. The fact that it's year-over-year is left out of a lot of the reporting. That's about the same amount it was up in June. So we haven't really seen an increase in numbers. We've just seen the regular, not the regular, this is a high number, but we've seen a steady number here. The CPI measures changes in how much American consumers pay for everyday goods and services, including groceries, gasoline, clothes, restaurant meals, haircuts, concerts, and automobiles. And I say automobiles loudly because that one's really important because automobiles are a giant drag here. So, Max, I'll get to you in a second. I apologize for having so much preamble here. These numbers, they sound scary, but let's take a closer look. The government said CPI increased 0.5% in July on a month-over-month basis. If you take out energy and food, and energy can be very volatile, we've seen oil prices and gas prices be up quite a bit, but then go down and sort of be a little bit all over the place. If you take those numbers out, it went up 0.3%. So kind of throw out that 5.4%. That's the year-over-year number, and that number matters, but we didn't have a giant spike. We had a 0.3% or 0.5%, depending on how you look at it. So Max, we're going to dig into this in depth, but before we do, what are your top-line takeaways?
Yeah, so actually, I think the 0.3 increase is month over month. So that's not year over year. So that's a slightly different
that is a month over month number.
Right. So it rose 4.5% compared to last year, 0.3% compared to June, I think. And that's excluding energy and that is the other
correct.
thing. Food. We like food here in America. So look, this is definitely higher than the historical averages. If we think about the historical averages, it's about between 1% and 3%. I don't know why I'm the only person on the screen right now. I actually like looking at Dan. Dan cheers me up. There we go. Dan, how are you? All right. So on the one hand, this is a little bit misleading, right? Think about last year. What was going on in May and June of 2020? Most of us were stuck at home. There was travel restrictions, all kinds of things. Lots of people working from home. So things were a bit different. So that year-over-year increase, it kind of makes sense, right? I mean, there should be inflation compared to where we were last year. On the other hand, 5.4% inflation is still pretty high. That's still considerable, right? If you made $50,000 in annual income last year, this year, that money's going to go $2,700 less this year. So that's $225 a month in less buying power that you have this year. So it does matter. It matters for investors too. I mean, if you're going to get 11% returns in the stock market, just pulling that number out of thin air, and then inflation's 5%, well, your real returns, if you adjust for inflation, are actually only 6%. So it matters quite a bit.
Now let me jump in with that one, Max, because that scenario is absolutely true, but it assumes that everything else is the same. So why do I bring that up? Well, we're going to talk wages in a second, and wages have gone up, especially at the bottom end of the economy. We also have expense differences. Now, this is year over year, and last year we were definitely not spending as much money. Many of us were not going to work. We weren't traveling like we were. But if you look at this on a 2-year basis, a lot of people who commuted to work aren't commuting to work as often. I know my wife is in the office today, and she's going to go back to the office 2 days a week. A lot of people aren't going back at all. So yes, absolutely. There are going to be some people who this makes their life more expensive. There are also going to be some people that have this offset by other areas where they are not spending. Is that a fair read on it? Feel free to disagree here.
Yeah, that makes sense. And wages are increasing, but so are prices. So it's kind of this right now we're kind of in the thick of it. It's hard to kind of tell really is this going to be temporary or not. But you think otherwise, I think you think it is going to be trans. You called up JPal this morning and JPal said, Dan Kline, love the show. Also, yes, I agree with you. It's going to be transitory.
Yeah, so I'm gonna we're gonna go completely out of order here. So this conversation is not gonna go according to our document. Before we talk about wages, before we talk about housing, I think we need to look at supply and demand. And I've talked about this a lot of times, but nobody knew when the pandemic was going to, I say end, because we're clearly not at an end, but change, when things were gonna open up, when people were gonna be able to travel. So there's all sorts of short-term shortages. Airfares got more expensive because airlines could only ramp up so fast. Rental cars are next to impossibly expensive for a whole variety of reasons, partially due to a car shortage, but partially also due to increased demand. I've talked about this before, but things like inexpensive beach towels were out of stock at the Target near my vacation home in the Orlando area because nobody expected that May was going to be a giant comeback month. So I don't think we know what let's call it post-pandemic, and I don't know if the pandemic's a thing of the past in 1 month or 3 months or 8 months, who knows? We'll talk about that a little bit later when we talk booster shots or the potential for booster shots in the next segment. But I would argue that we need to sort out the economy. It's very much like I've talked about the demand at Starbucks, that it used to be really clear. Like people left for work somewhere between like 6:30 and 8:30. There was a line at Starbucks until about 9 o'clock. Then it got a little bit less. Then there was a lunch rush. Now, Starbucks might be busy at 11:30. It's really confusing. And I think our entire supply chain is dealing with that because very few retailers can turn on a dime. Yeah, Walmart can adjust in maybe a month or two. Amazon can adjust in a month or two. Target maybe. Nobody else can. So the reality is we're in a situation where inflation doesn't mean price increases, and we're seeing price increases. We're also seeing, you talk about food, it's more expensive to go out to eat than it is to eat in. You know what a lot of people have been excited to do pre-Delta variant? Go out to eat. So I'm not sure I buy that any of this is inflation, with some notable exceptions in housing and in automobile, well, not in automobiles. In housing and automobiles are up for a reason we can explain.
Yeah, so I think that's true. So there's the supply part of it, as you pointed out, but it's I think it's broader than that, right? So it's not just that the price of goods is going up and raw materials is going up. It's that the packaging cost is going up, the shipping costs are going up. That's a little bit different than we just need to tune factory output for 2021 compared to 2020. That's still a component. I guess I just lean towards it being maybe stickier than the Fed thinks, or stickier than it's going to be. I don't think it will be transient, and that's of course depending on the time frames. But I think we're going to see some higher inflation for a few years, much higher than the 2% level the Fed thinks. And look, I mean, we're going to get into this. Well, let's just get into it now. What are some of those big components that are dragging up inflation and CPI, Dan? I mean, you talked about cars and rental car prices.
So cars is the biggest one.
Yeah, it's like a third, right? Isn't it like a third of all the inflation or something?
Something like that. And by the way, we welcome your questions and comments. So feel free to weigh in wherever you are. Give us your thoughts here. Yeah, cars are about a third. And cars are not expensive purely because of demand, or because aluminum is more expensive, or plastic, or whatever they make cars out of, steel, I suppose. You would know, you're in Pittsburgh. This is one of those things where cars are expensive because there is a chip shortage that is forcing car manufacturers to slow down their ability to make cars. So right now, they're making the cars that are most likely to sell at the best prices. That has a ripple effect on rental cars, because rental cars are very stripped down, low margin cars. That's actually pushed the rental car companies into the used car market. The used car market is insane. Let me give an example, and then Max, you could jump in. So I bought my car for a little over $10,000. It's a 2016 Toyota Prius. I sold my Nissan Versa back to Carvana for about $4,700. I could not buy my Nissan Versa back for $10,000 right now. And there is no such thing as a car under $11,000 on Carvana. The prices simply have gone astronomically higher. And that's based on demand, and that will go away. Now, that might take 3 years to go away, because first we'll fix the chip shortage. Then we will have a spike in demand, because there's a lot of people that are holding their cars together with, Scotch tape and gum to get through this. But again, that's just expanded supply chain issues. And it ripples across the entire economy. Look, it's a negative for me that there are no rental cars. My vacation property is off-site from Walt Disney World, so it's hard for me to get people who want to go to Disney. So I just think there's a big economic ripple for all of this. Max, I know you disagree a little bit, so feel free to jump in.
Yeah, no, I mean, I agree with that, right? So for car prices, used cars, rental cars, that should be temporary, right? Because of the chip shortage. A lot of manufacturers, automakers are kind of curtailing or even stopping production at facilities because it doesn't make sense to continue. Lots are filling up and they're just waiting to put chips in and other components in later. So that makes sense that that's temporary. Of course, it's no solace if you are in the market for a car. And I've actually thought about this. I just drove out to Philadelphia, right, to visit family. And I was thinking, man, this would be a really bad time to have my first accident, on a big road trip like this. I'm never like buying a new car now would really, really suck. So that's definitely true. Another thing, though, another like 1/3 of inflation is actually called shelter inflation. So it's the price of rent and housing. That looks a little more worrisome, a little less temporary to me, Dan. And you had some thoughts on this, at least in your home market in Florida.
Yeah, so let's talk about this because I think this is actually the big story. So let's pretend you're a retail worker. My son's been working at Wendy's. He's 17, so he doesn't have housing issues. But let's say you're a retail manager, and because your company, and a lot have, your company raised wages to $15 an hour, all of a sudden you had to raise your manager wages. So, maybe you were making 50 grand and now you're making 58. But the price of buying a home in your market went up 30%, and the price of renting a home in your market went up, I don't know, somewhere between 10 and 50%, depending where you are. Here it could literally be 50%. That puts you in a tough situation where all of a sudden you're making more, but you can afford less. But for a lot of people, that's factoring into the where am I going to live equation. So I know, and Max, you could tell your story after, that my wife and I sold our home because it was worth so much during the peak of all of this. We bought our vacation property, which is since appreciated by like $50,000. I can't do the math on that, like a third of what we paid for it. And we're looking at some point when my son's out of school, moving from expensive West Palm Beach, South Florida, to much less expensive Central Florida, where we could afford a much nicer house. Not everyone could do that, but I do think as you're seeing housing inflation, that is going to be smoothed out by population shifts. And I do think we saw this huge migration to Florida, to warm places. Miami prices went insane. West Palm Beach prices went insane. We've seen Texas prices go mad. And I do think we're going to see more of that shift. Like you might see in Pittsburgh an increase in prices because compared to New York, Pittsburgh is really, really inexpensive. I think we've seen that in Cleveland. I think Boston, which sounds crazy to not talk of Boston as an expensive city. But if you lived in San Francisco, Boston's not so expensive. So I do think it's a much bigger question than inflation. And we see some questions and comments. They're not related to this topic. So if we can answer them, we'll get to them later in the show. But we'd, of course, like your relevant questions and comments. Not that the ones that aren't ones we're happy to take. We just won't take it in this segment. Max.
Yeah, so I live in Pittsburgh. It's one of the lower costs of living cities, right, in the major metro areas. If I can extend the definition of major metro area, Dan. So housing prices here are insane right now, and they had a low base, to be fair. So I don't know if that's just people moving into the area from outside the area. We do have a big tech presence, a lot of tech companies here. Believe it or not, we are no longer the Steel City, unfortunately, or maybe fortunately. It's probably a better thing. I can walk outside without a handkerchief over my face like they used to 100 years ago. So that's a good thing. But I was casually looking at houses because I rent.
But don't walk inside without one. The CDC right now is recommending. No, I'm just
exactly. So I was casually looking, just like, my lease renews at the end of the year. Like, what could I get? And I mean, on Zillow, at least, they have like the historical chart of like, what did this house cost? And some of it's an estimate, right, over time. But like in like late 2000, it just spikes really, really high for a lot of houses that I've looked at. So I could afford it, but I'm like, man, I think maybe this will come down, or I can afford more if I just wait another year or two. So I think I'm going to do that. But a lot of economists are starting to be worried about this is called shelter inflation. So again, rent and housing. And as you mentioned, it's a big component of people's budgets, also about a third of inflation. So Economists at Fannie Mae have said shelter inflation is probably going to more than double from its 2% now year over year to maybe 4.5% or more year over year. And they think it's going to remain at those levels for a few years. And that's just due to there's a lack of supply in the housing market. We're not building enough. A lot of millennials, right? There's demographic shifts are pushing more millennials into their peak home buying years, and then there's just not enough supply for everybody. So even if other parts of inflation, like maybe cars and rental cars, come down, shelter inflation, housing market could actually more than pick up the slack. So this could actually be one of the things that keeps inflation pretty high and well above what the Fed expects for a few years.
Yeah, and I actually agree with that, because here's the reality. Moving takes time. And, we talk about this from an investing point of view. I think a lot of smart companies, certainly the big tech companies, the biggest players, are looking at, well, where else can we operate? Does it make sense to open an office in Orlando because it's an inexpensive place to live? Should we open in Las Vegas because it's an easy place to fly to? That's actually also a pretty inexpensive place to live. But you can't do that quickly. So it's one thing to say like, hey, yep, we believe you can work out of these 10 new cities and that would be great for us. And you can live less expensively, and maybe you'll take a pay cut, but you'll still come out ahead. I think that's the trend, but that's a trend that's going to take some time. Like I mentioned that my wife and I are looking at moving. Well, I have a son who's in school to the end of the year. I have a lease that runs, we'll renew in December. And so then it would be run through December. Do I want to own 2 homes? Do I want to buy something and rent it out? Like that's all very tricky, and not everyone can manage that. So I do think we're actually in a massive population shift that will lead to housing inflation. It's just going to lead to, call it, more palatable housing inflation. What do I mean by that? I mean, okay, I'm willing to move to the greater Orlando area where $350,000 buys you a 2,200 square foot 4-bedroom house with a pool in a resort or a resort-like setting. That to me is fabulous. That same house cost $289,000. So, a year ago. So is there inflation there? Absolutely. But it's going to price out certain people. Those people might move to a farther away from Disney World part of Central Florida. So you're going to see, I think, a pretty big repositioning of the populace. And that is going to be really good for Amazon, which can deliver pretty much anywhere. It is going to be really good for the bigger players. It is going to create some challenges. We've seen this with Starbucks. Every few years, they announce they're closing 400 or 500 stores. Well, that's due to population shift. Wouldn't shock me if you saw that number double coming up this year, because you're obviously seeing a lot of business areas where people aren't going back to work full time. And maybe in New York, where I once checked, there were 82 Starbucks within a mile of where I was near Madison Square Garden. Well, maybe you're only going to need 52, because not every building is going to be as busy. So Max, is this something like, have you thought about, geez, maybe I should move somewhere to follow this tide?
Well, I mean, I'm anchored in the Pittsburgh area for family reasons. But I've definitely thought about changing what neighborhoods I would want to buy a house in. And we work from home, so we're a little bit lucky in that sense. We don't need to necessarily worry about commute times for the most part here at 7 Investing. So, I've at least expanded what neighborhoods I would look at, but it's still depressing. I don't know.
Yeah. So here's the thing. I don't want to poo-poo the idea of raising prices. I just don't necessarily want to call it inflation, because we talked about cars. That is a big piece of it. We talked about housing. That's a big piece of it. But appliances, who knew we were all going to put our refrigerator freezers through the paces we've put them through in the past year? I bought a refrigerator freezer right before we put our house on the market. So that was an incredible waste of $1,800. But it took like 4 months to get it. We've ordered a couch and a chair for our new home, and that was a delay. Did we price shop? No. We literally went, found what we wanted, and looked at different colors and said, well, which color could we get fast? And picked maybe not our favorite color so we could get it. And fast was not fast. Fast was like 2 months. So obviously you don't have to discount when you're back ordered. So again, I do think a lot of this will shake out, and I think we need to know, as we figure out, call it 18 months from now, how many of us are still working from home most of the time. Well, that's going to impact, say, the laptop market, the chair market, all the housing market, because you want a bigger house if you're going to work from home. So I'm just hesitant here, Max, to use the word inflation, but I do think we are going to pay more for a lot of things. And I recognize that that's
the definition of inflation, Dan.
It is, but the underlying reason for it will correct. And I'll go back to it's the last piece of my document. It's what Jerome Powell said. He said the recent acceleration in he acknowledges the recent acceleration in prices, but believes that the inflation is transitory and that prices won't continue to increase at their current pace for too long. That's not entirely saying that they'll go back, because prices tend to not fall. But I do think there will be a pretty significant raise in wages. We didn't talk about this, but there are more jobs available by 1 million than there are people looking for work. That was the case before the pandemic. We are back to that. There's a lot of reasons for that. Large childcare is a big piece of that. But I just think, and I talk about this a lot with every stock that reports, I almost think you have to throw out the last 6 months and the next 12 months. It doesn't really matter if Papa John's Pizza had a great quarter because people decided to stay home because of the Delta variant. That doesn't necessarily tell me that Papa John's is a good business. It might tell me that Domino's was so busy that they were a 45-minute wait, or that the better restaurants, were backed up. We've absolutely made ordering decisions based on wait. This place we like has a 90-minute, delivery time. I throw a lot out this year. I'll give you the last word, Max.
It's interesting, if you have a historical perspective, the Federal Reserve is often wrong in their big policy decisions, and at the worst times. You can look at like the last 3 or 4 chairmen and chairwomen, in the last several decades, and they've gotten it wrong later, and then we all just kind of ignore it, and everybody else has to deal with the repercussions. Now, it is interesting to me though, like there's a growing amount of criticism from economists, like world-leading economists, lawmakers, even people who are in the Federal Reserve, right? Who think that the Fed's doing too much right now. And I think one way I look at it, Dan, if I could see your beautiful face again. All right. The Fed is currently buying $120 billion per month in treasuries and mortgage-backed securities. If they weren't doing that now, if there was no stimulus and we had the exact same economy, everything else was the same right now, inflation, unemployment, everything was the same as it is now, do you think they would start buying $120 billion worth of securities right now? Would they start doing that?
I don't know. I think the reality is
like an obvious no. Go ahead. I'm sorry.
I think the reality is that once they're doing it, they're going to be very, very careful to undo doing it. I've argued that they should put a small percentage of that into Pokemon collectibles, but they have not. They have not agreed. But I think the Fed is going to be very, very, very careful to move in a measured way, because we've seen like Twitter rumors of what the Fed might do will send the market up or down by 400 or 500 points. That being said, those tend to be very, very short-term moves. We don't see, Fed meeting notes cause the market to change course for 6 months, for even a week usually. It's usually at the most 2 or 3 days of the sky is falling, and then like some minor company, then like Wendy's will come out with good earnings, and people are like, oh, it's fine, like everything's good. So I think the Fed gets way more coverage than its actual impact. Not if it was to move radically quickly, but it doesn't move radically quickly. It moves like a glacier. Bad if you're the Titanic, generally easy to avoid.
Yeah, I think there's a risk though moving too slowly now. If they just keep pumping money into the economy when it doesn't need it. Imagine if something else hits. There's no other tools the Fed has to respond to the next crisis if there is one. So then we're all going to be on the breadline, I think. And but I think there's risks of moving too slowly. And yeah, would the market hate it if they start like tapered more quickly and maybe raise interest rates more quickly than expectations? Sure. But I mean, the consequences of moving too slowly might be worse than that. So I think, I don't know, it's just a delicate situation for investors. I agree with you. The Fed's probably not going to do anything too quickly, too hastily. But I think there's risks to that as well.
And we did see that even in a very divided country, there was a pretty strong federal government backstop. Obviously, stimulus wasn't perfect. None of the programs, worked 100% well, but there was a pretty big effort there. So if we get murder hornets that shoot COVID-20 or I don't know, fire-breathing lava monsters, I can't even picture what the horrors are going to be. I'm actually pretty confident that even our divided government will stop us from all being in the bread lines. I want to take a quick comment from Ravi Shah, if you want to pull that up, JT Street. And let me just give a heads up. We are going to talk whether we need booster shots next. We're going to follow that up by closing out the show with talking about a new partnership between Pepsi and the Boston Beer Company regarding boozy Mountain Dew. Yes, you have that right. Ravi Shah says, living in the Bay Area, you cannot find 2 to 3 bedroom condos for under 1.2 to 1.3 million. Yeah, and we're also seeing people are leaving the Bay Area because of it. We saw this in New York. Now, did the New York market crash? Absolutely not. It fell by like 5 or 6% and then recovered a little bit, and you can get, it's a little easier to rent someplace, and maybe the price didn't fall, but you're getting, last month free or some sort of, 6 months of a storage space or whatever it is. So you didn't see a collapse in those markets. You saw just a slight downtrend. And I think you're going to see more of that as these big companies, and I talked about it, a bunch of times on this show, as these companies say, hey, you know what, let's open up in Houston, Texas, which just seems crazy expensive until you look at the prices in San Francisco. Let's open up in Denver, Colorado, all of these other hub cities with airports. You might see some companies do some interesting things and say, like, you know what if we put a campus in Portsmouth, New Hampshire? Like, all right, the air travel's not that great there, but land's pretty open, pretty cheap. There's a lot of housing available. So we're going to revisit this topic. This is one we're going to talk about quite a bit. We'll take the last comment from Anna Gomez, and then we will move on here. Colorado is getting inundated by folks coming in from other areas. Yeah, so is West Palm Beach. So is Miami. And here's the thing. As much as it made it hard for me to find a place to live, I welcome you. Because the more people that come in, I don't know. I like people. I enjoy people. I'm sure you could tell that. We are going to move on to talk about booster shots in a second. Before we do that, I want to talk about 7 Investing. We are, of course, lead advisors for 7 Investing. What does that mean? Each month, we share our highest conviction stock pick with our members. What does that mean? We sift through dozens, hundreds, thousands, no, probably not thousands, dozens or hundreds of stocks each month to figure out which one is our best pick. And I'm honing in on a couple for September. I have one that's one of my favorite stocks in my portfolio. And I just think the market is incredibly undervaluing it. So, I think there's a decent chance I will say, hey, that's my stock. But a lot of research goes into this. What do members get? Well, if you're a member, you get those new picks on the first of the month. You get them along with a write-up and a video, where in our videos, we pitch the other members. We do a PowerPoint presentation with all sorts of shiny graphics. There might be a marching band. There's all sorts of cool stuff in these videos. Call it a deep dive where you can watch as much or as little. So maybe you have some feelings about a company, but want to know about its management or are worried about its valuation. You can move right to those sections of the report and dial in and say, okay, here's what Max says. Here's what Dan says. I use our picks to counterbalance my own relatively conservative nature. I buy almost all of Max's picks and lots of picks from Steve and Anirban and Simon and occasionally from everybody, really. So there's lots of different ways to use it. How do you become a member? That is really easy. If you go to 7investing.com/subscribe, you can sign up for either $49 a month. That gives you access to all our current picks, all our past picks, the table that shows you our full performance. And I'll point out, it helps to read what our goals are in some of these. Because if you look and say, oh, that one's a negative, well, maybe our horizon on it from the beginning was 7 years or 10 years. Like we are getting, that's a lot of Max's picks. We are giving you that story. So I've seen a lot of self-congratulations after some companies reported results and the stock goes up 10, 12%. I've seen this widely on Twitter. That's kind of not how we operate. We're not focused on the quarter. We're focused on the long term. You also get access to members-only calls, discounts on members-only jackets. No, that is not a thing. That is an 80s reference. But we would love to have you. We have a good time. The membership is like a family. We are quick to respond to people. We take a lot of questions at the members-only calls. And I can't say it more. Max, let's seg a little bit. We'll get back to your questions and comments towards the end of the show. But Max, you wanted to talk about the need for boosters. As far as I can tell, the only people who are talking about boosters in the short term are the CEOs of companies that make COVID shots. And I don't want to downplay that, But hey, if I was Coca-Cola, I would probably be touting a study that says you need more fizzy caffeine in your diet, even if it wasn't that credible. What are your thoughts here?
Yeah, so I just wanted to touch this topic again, given the Delta variant wave that we're going through right now in certain parts of the country. And look, in recent months, companies have kind of been going back and forth over what they've publicly said about boosters. It kind of started like Pfizer not years ago, a couple months ago, said we're going to need boosters. We're going to ask the FDA and CDC to authorize our booster shots. And federal health agencies were like, hey, before you announce things like that and ruin our public messaging on a very sensitive topic, maybe you should give us a heads up because we don't think you need boosters yet. So cool it, Jack. And then Pfizer said, oh, we're just going to wait for health agencies to whatever they decide. So they kind of backtracked a little bit. And then you saw all the vaccine manufacturers kind of, all of them kind of backtracking and we're quiet for a little bit. But they've kind of taken advantage, I think, of the Delta wave. And then on Q2, earnings results and quarterly updates, a lot of them, again, kind of made this pitch for, well, we have boosters ready. We have all these studies underway. We're probably going to need boosters by the end of the year. And so you're starting to see this like swing back to all these companies again are saying we need boosters. Real world evidence doesn't really say that that's going to be true, even with the Delta variant. If you're vaccinated, you're pretty much going to be fine. So there's 40 states and Washington, D.C. that have data. They publish data on hospitalization rates and death rates from COVID-19. In all of them, it ranges from hospitalizations and deaths of vaccinated individuals are less than 1% to up to 6% of the total hospitalizations and deaths. So if you're vaccinated, even with the Delta variant, this means that COVID or coronavirus is actually less deadly than the seasonal flu. So, this isn't like the headlines make it seem like we're going to need boosters. This is going to be with us for years and years, and there's going to be variants. And that's just doesn't really seem to be supported by real world evidence. So to me, it just seems like vaccine manufacturers kind of wanting to keep the gravy train going.
And Max, let me be very careful when I introduce this, but that 1 to 6% that is vaccinated, that is getting hospitalized, and some percentage of them dying, the vast majority of that is actually people that have other issues. So that leads to our next question. Might it make sense to give boosters to some populations? I would assume elderly or people that have certain issues. I have a cousin who has leukemia, and the first 2 shots did not produce a robust immune response because he's taking other drugs that get in the way of that. And his doctors are trying to figure out if he should be taking a different one or try. And I hate to say he is kind of an experiment because obviously it's a unique case. But might we see elderly populations or at-risk populations be a good case for a booster here?
Yes, I think that makes sense. And that is actually what the CDC or FDA are actually looking at. Maybe boosters make sense in certain populations. The elderly who just tend to have a less robust immune response to vaccinations in general, they might need to get boosters. Obviously, if you're immunocompromised, and that means a lot of different things depending on how you're immunocompromised, maybe you need a booster more frequently. In terms of the general population, I don't think we'll need boosters very frequently. Meaning I don't think we'll need them every year. This is not going to be like the seasonal flu, even though, some of these strains are going to be mutating and things like that. So again, I've explained this in the past and I'll touch on it again, but we see a lot of these studies and we see about, effectiveness of vaccines over time, or we see things like, you were vaccinated 6 months ago and what are your antibody levels in your blood that we can detect, now, or what are they going to be, 6 more months from now? And those are a little bit misleading because your immune health isn't just about antibodies, right? Actually, what's more important is T cells and B cells. Those are way more important in terms of your long-term immunity. That's what actually retains memory to the vaccine or to the virus if you've had an infection. So, after exposure to a vaccine or the actual virus, your body's going to pump up levels of antibodies because it's going to be on high alert. But over time, it's going to be wasteful if you haven't seen that threat again. So your body will eventually start to reduce the amount of antibodies that it produces. That doesn't mean you've lost memory of it. It just means, it's pouring resources into other bodily functions and other parts of immunity. But if you saw that, the virus again, your body would start ramping up levels of antibodies again, right? Most likely. So it's possible that we got vaccinated, and it lasts for 2, 3, 5, 10 years. We don't even know yet. But so that's important to keep in mind when we're talking about like antibody titers, which is something you'll see in a lot of press releases or articles or studies and things like that. Another reason, and this is kind of interesting and newer, for why we might not be rolling out, these vaccines across the general population. If you look at some of the studies, and these are still very new and early, of the booster shots, there's some other concerns. So Moderna has been testing 2 different versions of a booster. So this would be a 3rd dose, and there's 2 different compounds they're looking at. Well, in that study, they saw a 10% or a 15% rate of grade 3 adverse events. So that just means a grade 3 adverse event means it's a side effect that often requires medical intervention. So you need another treatment, or you need maybe even hospitalization because of that reaction. That's a pretty high rate of a grade 3 event for something you're going to roll out across the entire country. If you think there's vaccine hesitancy now, 15% of people or 10% of people that might, end up in the hospital because they get really sick from a side effect to a vaccine, which is really just going to be their immune response, but they still might feel terrible and need to go to the hospital. That's going to cause a lot of confusion and hesitancy for boosters. So, that does make some suggestions that we can't just be rolling out mRNA technology. It's a very valuable tool, but we can't just be rolling it out like candy. And then every 6 months we need boosters just because the company said we do. That could cause some problems. We might need to space these out much further due to the immune reactions that they're causing. Or this is also going to cause companies to maybe, go back to the drawing boards and innovate and create booster shots or mRNA technology that creates less, side effects over time. But this also suggests too, like we want to roll this out for seasonal flu, and it's a bit different because the flu changes so much. But that could cause some problems for mRNA vaccines for seasonal flu. If, at 3 years later, after you get your 3rd mRNA flu vaccine in the future, you're going to have some really terrible reactions. So we want to really be good stewards of this tool and technology. It's great. It's powerful. It was a very amazing technology for, handling the pandemic, but we have to be very careful with it going forward. It's not just, it's not a free ride. It's not a silver bullet.
So Max, I have one last question here, but first I'd like to share. I put Max on the screen if you could, JT. This is a reactionary thing. I picture my T cells as full-on A-team B.A. Baracus taking on the virus, and my B cells as Sully the Bruins fan who had a few too many before the game against the Flyers. So I picture there is a lot of excitement going on in my body battling the possible COVID infection. But let me ask one last question. I asked you this on Slack, and it got lost in the shuffle here. If you've had an mRNA vaccine, might it make sense to get the Johnson & Johnson vaccine? And conversely, we have seen in some cases, people who have had the Johnson & Johnson vaccine, at least they're testing this, get a booster of an mRNA vaccine. Can you be too safe? Can you wear too many raincoats in the rain? Or is this, again, Max is not a doctor. Max has a master's degree. He's researched this stuff. If you don't know the answer, that is okay. But I'm someone who really believes in science. So if getting another vaccine is a thing, I'd be happy to do that because I'm going to Vegas Sunday. I've got a cruise in September. I want to go places.
Yeah, I'll say I don't know. It could make sense to mix and match the vaccines within certain settings. I know, actually, I think it's Germany. One country is actually giving boosters of an mRNA vaccine to individuals, I think healthcare workers, if they receive like the AstraZeneca vaccine. So again, those work a little bit differently. The immune responses should be about the same. But yeah, that'll be interesting to see. I mean, again, we have these tools, so we could use them. We're just going to require some more studies and some more, work from regulators and things. But that could be possible. I think if you got 2 doses of the mRNA vaccines or 1 dose of Johnson & Johnson, all the studies so far say you're pretty much going to be fine. So hopefully we won't need to mix and match at all. But that could be possible.
And let me throw out one last thing. Don't buy Pfizer, Johnson & Johnson, or Moderna because of the COVID vaccine. Max has talked about this, that even if we do take a booster and they get another benefit, another 20%, 30% profit, significant short-term profits, Max has explained to me why it's unlikely we would ever get a 4th. And if we ever did, that would probably be the max. So this is not going to be the flu shot. This is not going to be a pure on revenue producer. Max, I'll give you 45 seconds to close out here.
Yeah, some of those valuations make sense if you look at like revenue for this year, next year. But this idea that we need billions of doses of mRNA vaccines for coronavirus for a decade plus is probably not correct. So it's going to be very difficult to sustain those levels of revenue, and that's how we value drug developers. I think this is a lot of these are trading on momentum right now. Like Moderna's at like a $200 billion market valuation. That's more than Amgen and Merck. It kind of makes sense based on the sales now, but it's going to be hard to sustain. So I think you have to just be reasonable. Think about 3 years, 5 years from now, that valuation could be quite a bit lower if things don't work out. Also, a lot of the vaccines, that are in the supply now have guaranteed purchase prices from governments. A year from now, or a booster shot, that might not be the case. They might be at the will of the market. There's more competition, so those profit margins and the revenue they can get from each subsequent mRNA vaccine for coronavirus might be quite a bit lower. So a lot of these things factor into the equation.
Mike Fee gives a little bit of explanation here on something Matt said earlier. The bottom comment, if you want, JT. Thrilled that German healthcare workers, I think that's the German flag, I can't quite see it, so I'm just guessing, are getting AstraZeneca boosters, third shots, after receiving 2 doses of the, I think it's fair to call it the controversial China Sinovac vaccine. Yep, I think that is what's happening. We're seeing some mixing and matching in Australia as well, where there are supply issues. So this is a story that is still developing. We appreciate that so many of you have had questions and comments. We don't really have time in this show to get to ones that aren't sort of related to the topic at hand. But I do want to share the one from Ravi Shah, because if you say something nice about us, there is a solid chance we are going to share it. And if you say something mean, we will take that to heart as well. Dan, you boost my Monday and Wednesday and Friday with happiness. I try to be upbeat. You're spotting us with so much good content that Tuesday and Thursday mornings feel empty sometimes. On Tuesdays and Thursdays, you get the 7 Investing podcast. Sometimes that's me, sometimes that's Max, sometimes that's a combination of any of us, but you get some amazing content there. I actually just completed an interview with the chief investment officer for GXO Logistics. Have you heard of that company? No, you have not. It is a spin-off of XPO Logistics, and it is in theory the biggest pure play in that space. And you've heard me talk about XPO Logistics, and not kindly. XPO does the last mile, and I had a bad experience with it. And I have to say, I'm pretty excited about GXO, which isn't doing last mile, and sort of what their opportunities are. And it was a really illuminating interview. And Max, you're smiling because you remember all of my complaints about XPO Logistics and not getting my refrigerator.
Well, that company doesn't have very creative ways to come up with names for companies. They just throw a bunch of random letters together and name a company. Is that how they do it, Dan?
Yeah, I'm not sure, and it is a full spinoff. So while they might be customers of each other, they have no more. There's nothing more tying them together. And I have to say, it was an illuminating conversation. I do think infrastructure and supply chain are going to be massive going forward, and this is going to be a player in that space. I bring this back to Ravi's comment that yes, this show has a different tone. I am way more upbeat than the average person doing this for a living. I'm an optimistic guy. I think it comes across that all of us like each other. I think that's very, very important. But there is amazing content, not just on our Tuesday and Thursday podcast, but at 4:00 on Twitter. If you have a Twitter account, you should bookmark that Max and I today will be doing Market Focus. That is the 4 p.m. Monday through Thursday Twitter Spaces we do. So we don't have to put on our nice clothes and turn on the video. It's just audio. And today, Max, what are we going to talk about? And I ask because I don't remember what we're going to be talking about.
We were going to talk about, I actually forget too. We just figured it out this morning. I'm sorry, I forget too.
We're going to talk about some aspect of the rental market. We're going to
rental bidding wars, which is going to put me into a deep depression around 4:15 p.m. Eastern time. But Dan wanted to talk about this, so we're going to talk about it.
So join us from 4 to 4:15 today, live on Twitter Spaces. Go to @7investing, and please, you can set a reminder so that pops up, and it really helps us while you're listening if you share it with your audience. The more people that share it, the bigger Twitter audience it gets to. And of course, tell your friends about 7 Investing now. This is unlike any other show, and we actually think that's pretty important because we take a long-term view on investing. And we clear out the noise and the clutter. But we're going to switch from the noise and the clutter to something that made me smile when I saw this. PepsiCo and Boston Beer are going to create an alcoholic Mountain Dew drink. I have never had any sort of Mountain Dew drink, but let me ask the question. So they're creating hard Mountain Dew. It's an alcoholic flavored malt beverage. It's going to be 5% alcohol by volume. So as someone who is a bourbon drinker, it's not going to be all that alcoholic, but that is in line with your typical beer or malt beverage. Early images of the product show that it will contain zero sugar. That may not be the case. It's expected to hit shelves in early 2022. And Pepsi has leveraged the Mountain Dew brand for years. There's the Mountain Dew products in Taco Bells. There's all sorts of variants of Mountain Dews aimed at gamers and other spaces. They have an energy drink that's a big seller. But let me ask the question, Max. Is this a good way to leverage a brand name to win share in a crowded space? I don't know if you know this, but pretty much every third company has a hard seltzer or similar product. Like, would it shock you if I told you that, I don't know, City Furniture was releasing I could have picked a more national brand there. I can't think of a single, if Macy's was coming out with a hard seltzer, like if Radio Shack was coming back as a hard seltzer. Is Mountain Dew going to attract attention in this market? And is this a smart move by PepsiCo and Boston Beer Company?
It is a crowded market, Dan. And I don't know, for, Pepsi, or does it make sense if they even capture like a few percent? Is that worth it for them? I don't know what Mountain Dew's been doing lately. I've never had it in a while. When I was a kid, remember it was like Mountain Dew Red came out, and then they had Mountain Dew Blue or something. Like, that was fun because it turned your tongue blue and red. I don't know about the hard seltzer stuff, but does it make sense if they capture like 3% of the market or 5%?
Well, I wonder if it undermines their brand. Like, I know Mountain Dew has been pushed in recent years as a gamer brand, but the core of its marketing was always like sort of an athletic, like a counterculture. Skateboarding was a big part of their iconography and imagery. So I do wonder, is that a positive that audience wants an alcoholic beverage, or are they this might be overreach? And I wonder, look, I think the hard seltzer market is here to stay, unlike, say, like the wine cooler market in the 80s, when Maxx certainly wasn't around to do that. But that was a really big thing, akin to this. But I do think there's got to be some contraction, because I went to our liquor store. We have a really nice ABC Liquors near us in Davenport. I actually think that one's in Kissimmee, but it's about a mile from us. And I went in and I was buying some housewarming gifts for a friend who bought a house in the area. And I'm like, yeah, I should throw some hard seltzer or something like in my fridge, or in my owner's closet for when I'm here. If the bar's closed at the pool, have a drink available. And there were so many choices, I didn't buy anything. It was overwhelming. It was like I'd have 3 things in my cart, and I'm like, well, maybe I want a pre-mixed margarita. Maybe I want a hard iced tea. Like, oh wait, that is too, it was too much. So I like this idea. I think anything you can do to stand out is probably good. I do think there's a small percentage of the Mountain Dew core audience that's not going to like this, but I don't think that matters. I think if they like Mountain Dew, they're not going to stop drinking it for that reason. So yeah, I think anything you could do to get attention for your hard seltzer or whatever exactly this beverage is, this alcoholic soda, I think it's not the worst idea. I don't think it's a game changer, but I do think it is a smart niche partnership. Max, your thoughts here?
Yeah, there's nothing to lose. The Mountain Dew brand, if you can leverage that or reinvigorate it somehow. And also, I went to college not that long ago. This could be big around like weekend parties and things and like that demographic. I don't know. Maybe it's trending on Reddit, Mountain Dew, seltzers or whatever. You never know. Maybe they could, get a couple percent, 5%, 10% of the market. Maybe that does make sense. Why not?
When I was in college, there was still beer that came in a white can that just said beer. And it was pretty common that if you went to a Friday or Saturday night, and I wasn't the guy going to these things for the most part. If you went to a Friday or Saturday night beer event, you were just handed a plastic cup and you never knew what type of beer you were drinking. I think there is much more of a beer culture now. And I do think that transcends. There are winners here. I will say that anecdotally, having been on a lot of cruises, Corona, their light beer and their hard seltzer, and Truly and White Claw have really become market leaders here. But we saw with Boston Beer Company that they had a big drop in sales here. So this is going to be very volatile. There's always going to be interest in what's new. Coca-Cola has experimented with alcoholic Topo Chico. I don't even
We appear to have lost Dan the Man Kline. Oh, there he is. But yeah, there's going to be other things coming too. It's not just seltzers. I mean, if we think a few years out, there's going to be like cannabinoid infused beverages. They have to make cannabinoids that are standardized and pure enough for these big brands to want to, pony up and like commit to that in their drinks and launch a brand nationally, because they need that consistency across the product. You can't get that with plants. You can get that with some synthetic biology innovations as well. But yeah, I mean, like you said, this could be a trend that only is valid for a few years, and then maybe it dips and the next big thing comes up. But it'll be interesting to see nonetheless.
I'll be in Las Vegas from Sunday through Thursday, and I'll point out that while I did not spend a lot of time dwelling on them, the various cannabis dispensaries do have various.
And Dan is cutting in and out, so I think we're just going to wait for him to come back. Oh, there he is. Maybe we just hit our finisher now.
Yeah, we're having internet troubles because Max has gone out a few times too. So why don't we hit our finisher and get to the end of the show here? Does fear of inflation / rising prices for consumer goods impact how you invest in the stock market? Overwhelmingly, 60% of you said no. I agree with this. I think there might be a couple of companies that are positives because of it. Maybe I would look at some of the home builders, though I think the commodity prices make that less attractive. But I do think that it's something you keep an eye on. It's something that creates a lot of short-term noise. But Max, it doesn't impact me at all in the short or long term.
Doesn't impact me. I invest mostly in drug developers. So inflation, deflation, stagnation, stagflation, it doesn't matter to drug developers at all. It might matter for some energy companies that don't have as much pricing power, like electric utilities or things like that. But for the most part, no, absolutely not. It doesn't change how I view. And if you take a long-term view, it really doesn't matter that much at all.
I have no idea what's going on with the internet. We lost internet last night. There's crazy weather here. So I'm going to say thanks to JT Street. Thanks to Sam Bailey. For Maxx Chatsko, I am Dan Kline. If you want to get in touch with us, that is info@7investing.com. If you want to watch us on Twitter Spaces later, that is @7investing. Please set a reminder and tell your friends.
Thanks for watching.
We will see you on Friday.